Okay, Leon, so you're the CEO of a substantial, like nearly 30 billion rand market cap corporation. But looking at the history of the company, it started less than 2 decades ago. So explain how that happened to me, from a consulting firm to a firm of that size in such a short spell of time.
Yeah, I think it's been a lot of luck, but the basic concept, it's really an accidental business. The basic concept was to create a development initiative to give people access to capital. At that time, when we started the business, our country was in deep trouble, but the basic things that people need in life, housing, education.
Talking about the early 90s.
Yeah. It was actually the mid-80s through to the early 90s. So the first sort of 6-7 years, it was all about trying to establish a way to get capital from people who have it to people who need it. And so it was really a developmental initiative to try and help people get access to capital so they can look after themselves.
Okay, so basically the business model is money lending, and as you say, you borrow in the kind of capital markets and then you make loans available, relatively small loans, until you establish someone's ability to pay. But who are most of your clients? How many clients do you have, and what do they mostly do with the money?
We've got almost 3 million customers, typically earning between 4.5 to 5,500 rand a month.
Okay.
Typically guys who are in the early stages of family formation, so they're like 30 to 40 years old. Generally the money has, and we've researched this and we research it all the time, as for housing and housing improvement. So a lot of the houses you see that are being built in little bits.
Room additions.
Yeah. And then education, the second biggest.
What kind of education? You mean paying for fees at slightly sort of above the ordinary public sector choice with regard to education, tertiary?
And tertiary education, university education. A lot of our customers, their kids are graduates, doctors, lawyers, mechanical engineers. Give you a classic story. Harbour worker in Durban's got 4 kids. 2 of the kids are mechanical engineers. One's an HR practitioner, one's a lawyer. Typical story.
So, I mean, in some senses, historically, sort of small lending has had a bad reputation.
Yeah.
But your model was to try and make things cheap, transparent, affordable, and reliable, right?
Yes, yeah. And it's predicated on a very simple premise, and I think most things in life are predicated on simple things, that the vast majority of people are honest, they want to do the right thing, they want to give their kids a better life than they had, and it's simple as that.
And where do most of the loans originate? People come into stores, or is it through a call center? Both?
No. 99% of it is through our branches around the country.
Okay, retail network where people come in, and then you do a certain amount of credit scoring and stuff like that centrally?
Yes, the underwriting is all central. So literally within 6 minutes of a customer walking into our branch, we don't know the customer at all, we'll be able to offer a loan to that customer.
And you've got special systems with your own secret sauce, which determines, like you've picked up interesting correlations between, you know, a household structure and the number of rooms and where people work and the credit quality of their employer and all that that determines their propensity to deal well.
So, and the thing about it, all our underwriting is actually proprietary. It's developed over many, many years.
Yeah.
But the principle that underpins our underwriting process is not about yes or no decisions. It's actually about how much, for how long, at what price. So it's trying to ensure that every person gets a fair crack at getting access to credit, but each person must pay what their unique price is for their level of risk.
And just speak to me about that, because there was a big legislative shift in the sort of mid-2000s that related to the size of loan that you could extend for your good clients. Just tell me about that.
Yeah, up to the National Credit Act coming into being in 2007, the Usury Act prevailed. And in terms of the Usury Act, a loan was limited to 10,000 Rand or less and 36 months. Then you could actually price how you felt was appropriate. Right. Above that, there was a cap.
Right.
What happened then, the NCA came in and it created a much more even distribution of loan sizes, which allowed us to be able to offer bigger and bigger loan sizes to our customers.
Okay.
And the principle, if you're going to do housing and housing related financing, a 10,000 Rand loan doesn't get you very far.
Mm-hmm. Okay, so we've talked about that side of the business, but just tell me where the money comes from that you obtain and that you lend out the other end. How have you developed that corporate sort of borrowing profile yourselves?
Yeah, it's interesting. We're a pretty unique bank anywhere in the world in that regard, is we borrow from the capital markets, and that goes back to our roots of saying, well, let's get capital from people who have it and give it to people who don't have it.
Right.
So we borrow in the capital markets. We do no retail deposit taking of any sort. We've just recently launched our international bond, which I must tell you was quite a...
So instead of raising money in capital markets here, you've now looked at international.
Correct. I must tell you it was quite an emotional moment for me to be sitting here in London raising money for what we're doing here in South Africa when 15, 20 years ago we couldn't raise a bean.
So obviously your profile and your risk profile has developed fantastically because you've gone on servicing your existing obligations.
Yeah, that's quite emotional.
And how were you received in that international market?
Fantastically. I mean, because almost 45% of our shares are held offshore, we're pretty well covered by international analysts, etc., etc. So we did have a presence there, and we just followed through from an equity perspective now into the capital markets, from a debt into the debt markets, and that was pretty good.
And in terms of the spread that you pay over sort of low risk treasury or sovereign type bonds, I mean, has that narrowed over time? You're now seen as a reliable issuer.
I think when we first started raising money, we were paying something like 600 or 700 basis points or 6 or 7% above the risk-free rates, and that's been down to like 3% or less.
Okay, so a couple of years ago you bought Ellerines, which was a furniture retailer, but a credit furniture retailer with lots of customers using credit. What was the thinking behind that, and what is the plan with that asset? Are you going to stay in the furniture trading business, or are you really looking for the financing part?
Yeah, the reason we entered Ellerines in the first place was we saw similarities to our market in that industry evolved by providing credit to its customers because the banks wouldn't provide credit. But that credit was largely very inefficient, very expensive, and cross-subsidized the core retailer.
Right.
So what we wanted to do was actually bring better value to that industry, to the customers of that industry. That's why we bought it, to actually bolt onto our business, scale it, and pass through the benefits of scale. You know, often acquisitions are just ego trips rather than actually predicated in something that delivers value to customers. So that's our objective. That's what we're trying to achieve.
And to that extent, it succeeded because you got all those extra customers. Although timing-wise, it was sort of a little bit tricky with hindsight. But I mean, I suppose one doesn't care about that. You just got to do what you got to do.
I mean, we definitely could have chosen better timing, but
before a global financial crisis.
But life is like that, and so you can't do anything about the past. It's what you do in the future that matters.
Okay, about the issue of you're a different kind of bank. A lot of people say, well, why don't you take deposits? Why don't you open proper branches? Why don't you have an account to which people can pay their salaries and all that? What's your answer to that?
I honestly believe that you can only be a real specialist in one thing. You can only really be good as an individual or as a company, as whatever it is, as a country. I think you've got to back yourself in terms of what your core competency is. And to have lots of competencies, I don't think actually really stacks up in the long term, personally. So for us, we love taking risk on people. We really like to actually try and dissect it, analyze it, price it, etc., etc. If we were to branch out and become a more traditional bank offering a wider gambit of services, I think our core competitive advantage and our core proposition would suffer.
I've got to ask you this. I mean, everybody loves Capitec. I mean, this is the sort of market rocket. They came off a low base. They're sort of in the same business as you. I'm sure you don't wish any ill on any of your competitors, but how do you view them and their success?
No, look, I think competition is fantastic. I think, you mustn't be scared of competition. I think it actually makes markets. It gives customers more choice, which means it's got to keep you honest. So I think their model is different to ours, and I think it's fantastic. And I wish them lots of success. It's become a lot more competitive, not only from Capitec, from the big banks as well.
Right.
And I mean, you can't make the kind of returns we make and not expect or anticipate to have competition. So it's not something to shy away from. It's actually something to embrace and actually ensure that you remain relevant to your customers.
Okay, another internal question, because viewers of this show know I'm always like into how does one arrive at a decision to be invest in a company. What's your view of sort of management succession, and how do you guys evolve organizationally internally? Because you've been running this business now, as you say, for like 17 years. What's the plan in terms of that going forward?
Yeah, look, I'm glad you asked that question, because at the heart of a successful business into the future, and a sustainable business into the future, is the people and the culture that evolves around that business. So for like what I do these days versus what I did a few years ago is very different. So it's much more about actually embedding a culture, a philosophy, a value.
Don't you still pore over the vintage charts?
Less than I used to. Okay. It's much more about being out there and talking about values and what's important. How do you behave towards your own people and then to your customers? And so succession and developing a culture is absolutely essential. And personally, I think that a successful business invariably sows the seeds of its own destruction if it's not careful.
Yes.
Because it starts to become arrogant and complacent and has a sense of entitlement to everything. You've got to smash those things out of a business and actually go back to your core and fundamental calling, which is about actually making a difference to people's lives.
Okay, my last question here is, you know, you've done fantastically well bringing us to this point. When people look at their options as investors in the financial services sector, I mean, your offering looks extremely attractive. And speaking from disclosure, I mean, my own firm, we're significantly invested in African Bank. The question for me, though, remains is transformative gains from an investment point of view come from investing in companies that do great things into the future.
100%.
So as you sit in your strategic meetings,
Yeah.
where do you guys see yourselves in 10 years' time? I mean, I know you're not particularly big in Africa, but it hasn't been a big part of your strategic initiative. What's your sense of how you're going to take this business and sort of double and redouble its earnings in the years to come?
Look, I think that doubling and redoubling the earnings flows from providing a fundamental difference to people in their lives. Still, too many people in this country don't have access to decent credit. So our job is to continue to grow the credit markets in this country.
So you'd by far not of the view that these things are mature. You reckon there's
definitely not.
plenty of gas to come.
I'll give you an example. There's the credit markets in South Africa are about R1 trillion big. Of that, 80% of that R1 trillion sits in two categories of lending, mortgages and car loans. Yet, 20% by value sits in, 80% by number sits in other categories, in other words, small parcels of credit. So the vast majority of people in this country do not get access to credit.
And certainly not for those big ticket items.
Yeah, and so our job is to continue to provide that to our customers. And if we do that well, the company will grow, the earnings will grow, and our aim is to more than triple the size of this business over the course of the next...
So it's not so much about doing something new or expanding to Marion Island, it's about deepening the trench that you're in at the moment, and you reckon there's plenty to come there.
Lots to do.